So step 3, we also need, now that we have the correct loss per day, and we also now have the correct loss per trade, we need to take the correct loss per trade to help us determine what price range should I be trading with my maximum loss per trade. Your maximum loss per trade helps determine what price range you should be trading. Let's take a look here. We have a $50 maximum loss per trade. The one very quick way to determine whether you are dealing with the right price range is to find the stock's fat bars. Let's take a look here. Look at the stock. Look, this is Tesla. And this is a 2-minute chart of Tesla, which means that every bar you see represents 2 minutes of trading. The red ones are 2-minute bars and the green ones are 2-minute bars, okay? Now, I want us to take a look at the fat bars. There's a fat one. There's a fat one. There's a fat one. All right, and there's a fat red one here. All right, fat red one. Now, if we take a look at these bars, let's zero in on this one. And I want us to judge what's the range of this bar. So this is more or less 579, more or less, at the low. And then at the high, we are more or less 582, 583. So what range is that? Let's say more or less this is a $3 bar. Now, professional traders can't trade less than 100 shares. My traders at their minimum trade 100 shares at a time. They can trade more. Remember, my maximum is 500 shares, but the minimum they can trade is 100 shares. They can't trade 2 shares, 5 shares, 10 shares. That is not allowed. They have to trade 100 shares at a minimum. Now, if the solid bars based on 100 shares, if I can only lose $50, my bar is $3. My big bars average maybe $3 to $4. A 100 share position that loses $3 loses $300. 100 shares measured by the size of this bar loses from high to low. This is how we judge whether we're playing the right price range. This is $3 plus again. I lose $300 plus if I lose this fat bar with 100 shares. I lose $300 if I lose this fat bar with 100 shares. I lose $300. This is even wider, I believe. I lose $400 if I lose that bar with 100 shares. So this is how we judge. We take the length of the stock's solid bars and we use the 100 share rule. If I lose the entire bar, will I have a loss that's smaller than my maximum loss per day? Or on average, does this stock lose more than my average loss per trade? So we need to go to a price range where the bars, the sizable bars, don't lose more than 50. So let's take this stock. This is Occidental Petroleum. It is in the mid $20 range. Its solid bars are like that. Even this red one is a fat solid bar. Now, if I judge the size of this bar, more or less, let's call that 2450. And let's call this 24, well, this is 45, so 0.45, and let's call this 0.15. So if I take these numbers into an account, this is a 25 cent, this is a 30-cent difference. Now, based on 100 shares, I would lose only $30. If I lost this bar, my loss would only be $30 with 100 shares. All right? Which means that this price range is perfectly fine for me to play. I need stocks that are closer to this price range because their bars, their fat bars, stay within my maximum loss of $50. Now, if my maximum loss per trade was $100, I could actually trade 200 shares or 300 shares of this stock most of the time. 300 shares with 30 cents only gets me a $90 loss. It stays within my maximum loss per trade of 100. And so this is how my traders are taught to know where to go to trade, what price range should they trade in most of the time, and how many shares, how many 100 share lots are they allowed to take on a specific trade. If a solid bar is only, let's say, 20 cents, 100 shares would create a $20 loss. Now, if their maximum loss per trade is $50, this trader can up the trade to 200 shares and try to make more money because a $40 loss would still adhere to their maximum loss per trade of 50. Now, do you have any idea how many traders do not know what to trade, do not know what price range is perfect for them, and do not know whether or not they should play, when they should play a little heavier or when they should play at the lightest? Most traders are just guessing. Most traders are just randomly trading. There's nothing rule-based that dictates what they're doing. They're not governed by rules. There's no trading plan in place that specifically says, okay, this trade is 100 shares. Okay, this trade is 300 shares. No, you can't trade that stock in that price range. But yes, you can trade that stock in that price range. And so when you start to get these things correctly, and when your size starts to be governed by your rules, when your losses stay consistently in a specifically designed box, you start stepping into the professional world of trading. These steps may sound basic, but they're the governing foundational cornerstones of proper market play. Everybody wants to get out there and look at indicators. They want this tactic and another tactic. But it doesn't matter, whatever tactic, whatever strategy you use, at the foundation of what you're doing must be rules that govern these things. Your maximum loss per day, your maximum loss per trade, the price range you go to with your maximum loss per trade, the specific stock that falls within the price range that allows you to adhere to your maximum loss per trade. And knowing when to play light, when to play medium, when to play heavy, when to play 100 shares, when to play 200 shares medium, when to play 300 shares heavy. Your plan should be dictating this, not just some random walk that you think is going to produce consistency. Random walks and decisions made randomly don't create consistency, traders. You can't be inconsistent and expect consistency to come from being inconsistent. Consistency comes from doing things the same way over and over and over again.